Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will continue with our Tesla technical analysis after the market has been corrected pretty severely last week. Let's take a look at chart to see what the future may hold for Tesla as well. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. Before we get started, I wanted to ask how many of you had a chance to buy the Cyber Whistle here. It is now out of stock and it is limited edition, so I am sad that I didn't get a chance to buy it. The shape of it looks amazing. Obviously, it is a Cyber truck related whistle, and I could not be more excited to own one. But if you happen to have more than one and would like to sell me one, I'd love to buy it back from you. Send me an email using my business email below, and I'll get back to you and hopefully we can arrange to make it happen. This one looks phenomenal to me and I hope to be able to own one. So let's take a look at charts here. This is the daily chart for Tesla. On Friday, it was down 6.4%. Now it is at $1,014. It is in the buying zone, which is the green area that I have here. The volume for Friday was 95%, so it is decent. It's not low volume by any means, but it is also not unusual given the volume there. The current 50 days SMA for Tesla is $978. I wouldn't be surprised if it would touch down to that level on Monday or sometime next week, and likely it would bounce from there. Once again, I still see the gap from 949 to 909 that is not yet filled. I don't know when it will be filled, but it is probably going to head down a little bit further before heading back up. On the daily chart here, if you look, zoom out a little bit, it is a double top, actually a triple top even, first top, second top, and third top. It is a little scary looking chart if we don't have Q4 delivery result and financial earnings coming out in January. For us to expect something really good out of Tesla. I think this is a very scary looking chart, and based on technical analysis alone, Tesla could fall back down to the 800 within the short time frame. Having said that, I think the catalyst for Q4 delivery is a significant one, especially Giga Austin. It's just a matter of days before it starts selling vehicles there. So I do think that Tesla have some positive catalysts. So I do think that Tesla has positive catalysts coming up in the next coming weeks. So hopefully the trend will reverse, but from here until back to about mid 1100, it is a long way because that would make another top. And then we don't know if it could fight that top or it will fall back down again. The more times it make the top at around 1160 or 1200, the more likely it's going to fall back down harder, unless it cross through 1189 with strong volume, then it could make an all-time high potentially. But as of right now, this is a very scary looking chart, and from a technical standpoint, it does not look good for the bulls. If you are a fan of Game of Thrones, you know that Littlefinger used to say chaos is a ladder. So right now with the chaotic market out there, it is a really good opportunity to buy the dip in Tesla as well as potentially buying leap call options in Tesla. So that's what I'm waiting for, a good opportunity to buy the dip in Tesla in terms of call options. I have been buying Tesla for the last few days, but I'm hoping that Tesla would revisit the 900s for me to consider a leap call option. Let's take a look at the hourly chart here. Based on the hourly chart, the trading range for Monday would be on the upper end, 1069. The middle pivot point is 1035, and the bottom pivot point is around 943. So it is a significant range to the downside for Tesla on Monday, and it is likely to Monday would likely to continue the downward movement, at least in the morning. So it does look like even on this hourly chart, we see a descending triangle with these hourly chart here on Friday. So chances are Tesla going to break down, touch 50 days SMA at the very least before bouncing, or it could potentially go all the way down to this bottom pivot point here. However, there is a bullish divergence sign. So if you look at, let me remove the buying zone here. Here's that descending triangle on the hourly that I'm talking about. As the stock makes its way slightly downward, RSI is moving upward. So this is a divergence. The last hour on Friday, the buy volume coming in pretty heavily in the last hour as well. So I do think that Tesla is set to bounce at any point now, but I wouldn't be surprised if it start with a tiny gap down, touch 50 days SMA at 978. That is about $45 from where it's at now, and then bounce. If it got to the extreme and is sold off heavily in the morning, get to this bottom pivot point here, it would be a good opportunity to enter a short-term call option in my mind. So I would wait for Tesla to cross below 50 days SMA to enter a short-term call option. And by short-term, I'm looking at a couple of weeks out. My price target for that option would be in the immediate term 1038 and then 1078. So I would buy with a strike price of about $1,050 and wait for a couple of days for Tesla to bounce. If you look at the RSI on the daily chart here, it is at extreme oversold territory. The last time it was at oversold was when Elon Musk sold a bunch of his shares. I want to say 3 million shares on that day. That was November 9th. The next day, after RSI hit oversold here, the next day the stock went down a little bit and bounced really hard. So we're looking for a similar situation here, especially when the RSI hit oversold like this, then I'm hoping Tesla would bounce. If Tesla falls down below the lowest point on Friday, which is below $1,003, I think that is a blessing in disguise, and it could be a good catalyst for a bounce. But for me personally, I have to wait for Tesla to cross below 978 to get to the optimal point to enter a call option. It may or may not happen, and if it may or may not happen, and if it does not happen, then I just miss an opportunity to buy a call at the bottom, but that's okay. My play is an extreme oversold condition that got to completely irrational the next day before I enter a call option. So once again, I'm looking at 978, and if Tesla get between 978 and 949, that is a good opportunity for me to enter a call option. So if you look at December 23rd, expiration $1,050. It is about $5,600 right now. I think December 23rd expiration has an advantage that it does not take into account the Christmas holiday. So you would not have to hold it through Christmas holiday, or at least pay for the premium that does not have a trading day value in there. But if you're looking to play the delivery result, then I would look out to January. The strike price for $1,050 would be around $7,700, which is pretty significant. But if Tesla gets to extreme oversold level on Monday morning, then this could be around $6,000 to $7,000, and that could be a very decent opportunity to jump in. You could also move the strike price a little further out to $1,100, and right now it is at around $6,000. That could get down to $5,000 and below if Monday morning the stock sells off. Now, if Tesla sells off to the extreme of $950 or something like that, then I would be willing to look into call options for March 18th. It would just be a little bit further out. It would not cover Q1 earnings, but it would buy me a few months. And so $1,050 strike price would be around $14,000, and $1,100 strike price would be around $12,000 or $12,500. So I don't look to buy at this level, I'm looking for Tesla to move down substantially, ideally $40 to $60 more, and see this premium deflate substantially before jumping in to buy. So that is what I'm looking out for. If you guys find this information helpful, I also write regular analysis on my entry and exit point on my Patreon page. If you're interested, I'll put the link down below, and feel free to consider signing up, where you would have access to conversations with me, as well as my analysis on a regular basis. Back to the daily chart here. Once again, this chart looks very bearish, but I am extremely excited, and I'm hopeful that Tesla will have another downside run on Monday and Tuesday, so that I have an opportunity to enter call options. Judging from the last 3 candles, I think that there's a good chance that Tesla would continue to go down and then bounce. Right now, 50 days SMA is $978. That is a first point that it would potentially bounce. If for some reason it dipped down below 978, it would tend to move back up to 978. So that would be an opportunity when it falls down below 978 to enter a call option. Once again, shorter term expiration, 2 to 3 weeks out. So December 23rd, or if you're looking to hold potentially closer to Q4 delivery result, then you're looking at January 7th. But as with all trades, I look at a potential cost benefit analysis. If the earnings or profit percentage is 50% or 100%, I tend to take that off, regardless if we still have a few weeks out from Q4 delivery result. So that's just how I manage my trade. I don't necessarily have to wait until the expiration of the option when I trade. Just keep that in mind. But buying more time is always a safer choice, especially you know that Tesla has potential catalysts coming up at the end of December, early January.